Hey traders, welcome back to Your Nifty Guy. I hope all of you are doing well. So what happened in the markets today? Nifty opened strong, pushed into a fresh all-time high around 26,300, and then quietly slipped back to close almost flat, leaving traders wondering if this is a healthy consolidation or the first sign of fatigue, all in one day. So in today's video, we are going to break down this entire move step by step, look at how the intraday structure evolved, and most importantly, build a clear trade plan for the next session. Where are the clean opportunities and where should we stay out? If you are new here, I am your Nifty Guy, and every day we cut through the noise and focus only on actionable, price action based setups. So make sure you hit the like button, subscribe to the channel, and turn on the bell icon so you don't miss the next day's roadmap. Let's jump straight into the charts. So, as I stated earlier, Nifty opened above the zone above which we're looking to create a long entry, created a new fresh all-time high. So it's time to adjust the all-time high as well. And post that, it was a steady downfall for Nifty throughout the day, right? Even every whatever buying was coming in around here, Nifty formed a base, went up, and then again immediately came crashing down, right? So again, for me, again, there were zero trades today because my bias was on the long side and all the trades, not all the trades, but then again, whatever is the price action was completely bearish. And if we look at it on a broader way, we are in a sideways consolidation, right? So since the last 3 days, this is the broad range in which, sorry, Nifty is actually trading. So my biasness on the long side plus the good opening. Uh, Again, do not take any trades on the short side around here as well. I wanted markets to give me a closing above at least this particular swing high, or I actually drew Fibonacci around here. Yes. So this swing was coming in between zero point 0.5 to 0.618. So I wanted markets to give me a closing above this. After a pullback, I would have created a long. And as you can see, uh, markets came all the way crashing down after this, right? Around here, Nifty had changed the structure on 5 minutes time frame, gave a good closing as well, but then again did not succeed. So this is what I was planning to do around this particular level. From this particular swing high to this low, I marked the Fibonacci. This was in the zero point 0.5 to 0.618 zone. So I wanted markets to at least take this zone out, and then after a pullback, I was able to create a long. But then, as you can see, we got a good closing. We got a pullback till around this time, but then again crashed completely around days low. In fact, 2 days low, right? Crashed below 2 days low. Now there were a lot of divergences that I observed in the markets today, not only on the long side but also on the short side. So first of all, for tomorrow, let us adjust the levels, right? So 26319.9. All right. Hmm. Now on a daily time frame, we'll start the analysis directly from I'll hide all the drawings, but the structure is much more clearer to us. Right, so as per our candlestick rules, there has been no change in the trend, right? Because for a change in trend, we need a lower high, lower low, as well as closing below prior low. Now we have got a candle which has a higher high, lower low. Closing is almost flattish, right? So again, we have still not got a bearish candle. Again, we might use this particular swing low to this particular swing high as a Fibonacci to find out our support levels. On a daily time frame, we also have a divergence. Like I said, I had noticed multiple divergences. So if you look at the swings on Nifty from around these levels, Nifty is making new highs, whereas out here on RSI, we have got a lower highs formation, right? So this is a negative thing. So it might be the first signs of the move actually turning into fatigue, and we might see Nifty retracing some lower levels. Now, this is a 75 minutes time frame fib that we have drawn. Now, we had not adjusted it until yesterday because this was the low and this was the high in which Nifty was moving in. But then today, because the new high has formed, so that is the reason we'll be deleting this particular fib levels from our chart, and I will be using the daily time frame. Like I said, I'll take this low from where the buying had emerged and today's high, and we'll mark the fib levels. Right? Uh, So like even on an hourly or a 75 minutes time frame, we can see that Nifty is broadly stuck in a range in the last 3 days. Friday was a good inside day as we had discussed. Today is called an outside day, completely covering all these 3 days, right? The range of the 3 days. On a 15 minutes time frame for tomorrow's analysis, I'll just quietly simply move it back so that it does not disturb the price action around here. Right. So we'll keep a range mark of this particular range. And for tomorrow, plan of action will be simple. Okay. So below today's low, we can expect the markets to go down further with a pullback, of course. We can also expect the trap setup to work in case if we see the flattish opening and market giving us a close below this, and then the high of this candle gets taken out. That is something where we can expect a long entry. I will again use fib from this high till this low, and in case if market has to recover, any long entries only above this high around this level. Again, if we see some negative price action, we can take a entry on the short side. It all depends on where we open. Now, around these levels, the markets can actually look at some support. So if we do find positive price action around here based on confirmations, use pullbacks after breakouts or breakdowns currently, and needless to say, below this we will be short, and we'll plan it once we are below the 26,000, right? This is also 26,000, almost around number 26,000, right? So markets can remain sideways as well, right? That is what happens when a good move has come, and markets can remain sideways, trap both buyers and sellers, and then continue in either direction. So again, this is the simple plan for tomorrow, and tomorrow is again the weekly expiry of Nifty. So my usual word of caution, or the disclaimer as I like to call it, is if you are trading tomorrow and if you are into options buying, please make sure to shift your entire trading to the next week's expiry. You will be paying a slightly higher premium for your entries, but then you will be doing yourself and your capital a much needed favor. This is what I personally do. I do it on expiry as well as expiry minus 1 day. So had I taken any trades today, I would have taken those in the next week's expiry, right? So that is what I had created my watch list as well. And those were the options that I was observing. But then again, nothing clicked for me. So it's completely fine and completely okay. So make sure to shift your trading to the next week's expiry, apart from the hero zero trade that we can get post 2 p.m., right? So that is something that we can trade in tomorrow's expiry. Those are low risk, high reward reversal trades, or basically based on the change in OI. And if you get any of those setups which is happening, you can take a trade in tomorrow's expiry. Otherwise, please shift your entire trading to the following week's expiry. So yeah, that wraps up today's breakdown. We have seen how the market behaved, what it hinted at, and exactly what we need to track for the next session. Now it's all about staying disciplined, following the plan, and letting the price do the talking. If you found value in this video, make sure to like, share, and subscribe. It really helps the channel grow and keeps me motivated to bring you clearer, sharper market insights every single day. Remember, consistency beats intensity. Show up, stay focused, and the market will reward you over time. I'll see you in tomorrow's video. Thanks and cheers.